So if we think about asset allocation, I think it makes sense to be in cash, and you're getting these 10% yields, which looks very attractive to us. Credit. You want to diversify yourself away from government South Africa, more into corporate South Africa. The balance sheets in corporate South Africa still look great. We think the probability of default is quite low in that sector, given, for example, the banks. They look attractive because they hold about 16% of capital. They sit with a lot of money on the balance sheet. The economy is not growing. Corporates look attractive to us. Economy is not really growing, but they have great profits because a lot of those profits are actually generated offshore. You want to actually take that 45 to 55% of your portfolio that's not offshore and actually allocate it maybe a little bit away from government South Africa. So what are we saying? We say, well, invest in cash. Cash is definitely not trash. Let's go there. Credit, we think that's still a good opportunity. Inflation bonds is probably that hedge you want to put in there that, look, if there's more rand weakness, we don't know what's going to happen over the next year or more in South Africa, in the world. Maybe you want to have a bit of inflation hedge. So that's where we think 4.5%, 5% real yields in South Africa look attractive. Nominal bonds, yes, at 11.30 where they're trading at the moment, yes, they look attractive, but yes, there's a big health warning around in nominal bonds as well. So what are we saying? Well, we're saying it's more of the same. Expect the central banks to be hawkish. So yes, at least 2 more hikes expected from the Fed. Probably another 3 to 4 hikes maybe from the Bank of England. They still got a long way to go. The ECB will probably have to hike all the way up into next year, probably closer to 4%. So don't expect the interest rate cycle to probably end in 2023. What we're probably looking for is that interest rates get to some sort of peak globally. Then they're probably going to remain sideways for a protracted period. And maybe in the middle to latter part of 2024, if inflation then really drops and there is a slowdown in the world, that we probably see these central banks cut rates. And that will probably be the same for the SARB as well. So don't expect cuts too soon from the SARB. So yes, good luck out there. It's a tough environment, but stay the course and good luck.